Imagine waking up on the first day of every month and knowing that within the next 30 days, checks are going to arrive in your bank account, whether you work that week or not. That is not a fantasy. That is what a rental property portfolio does for the investors who build one. My name is Rick Puglisi, 19 years in real estate, and today I want to talk to you about the strategy that, above all others, has created generational wealth for more families in America than any other asset class. Buy and hold, rental property, passive income through real estate. This is not complicated, but it requires patience, the right knowledge, and the willingness to start before you feel ready. Buy and hold means you purchase a property, rent it to a tenant, and hold it for years or decades while it generates income and appreciates in value. You make money in 4 simultaneous ways with a rental property: cash flow, the monthly profit after all expenses; appreciation, the property value increases over time; equity buildup, your tenant's rent pays down your mortgage; and tax advantages, depreciation deductions reduce your taxable income. No other common investment asset does all 4 of these things at once. That is why 90% of American millionaires made part or all of their wealth through real estate. The key is buying right, the right property, in the right location, at the right price, and then managing it properly. Not every property makes a good rental. Here's what you're looking for: strong rental demand. You want to be in a market where people need to rent, growing job market, good schools, proximity to employment centers, a price to rent ratio that makes the numbers work. A property that costs $200,000 should ideally rent for at least $1,600 to $2,000 per month to generate meaningful cash flow. Low maintenance requirements. Older properties with deferred maintenance will eat your cash flow in repairs. Newer or well-maintained properties cost less to operate. In our Sarasota market, the luxury rental segment has proven extremely resilient. But every market has its own sweet spot, and you need to understand yours before you buy. Before you purchase any rental property, run these numbers honestly. Gross rent. What will the market support for this property in monthly rent? Vacancy allowance. Subtract 5 to 10% for months the unit may be empty. Operating expenses, property taxes, insurance, maintenance, property management if you're not self-managing, and capital expenditure reserves. Mortgage payment if you are financing. What is left is your monthly cash flow. If it's positive, the property earns money every month. If it's negative, the property costs you money every month, regardless of appreciation. Never buy on hope of appreciation alone. Cash flow is your safety net. Appreciation is your bonus. This is a question every rental property investor faces. Do you manage the property yourself or hire a professional property manager? Self-management saves you 8 to 12% of gross rent in management fees. It also means you're available for tenant calls, maintenance coordination, and lease renewals. Professional property management costs you that fee, but buys back your time and removes the day-to-day operational burden. A good property manager handles tenant screening, maintenance requests, rent collection, and legal notices. My recommendation for beginners: hire a reputable property manager for your first property. Learn the business from a distance. Then decide whether you want to manage future properties yourself as you scale. The goal of buy and hold is passive income. Do not let it become a second job. Here's the math that changes how you think about this strategy. Let's say you have a goal of replacing $5,000 per month of income with rental cash flow. At an average of $500 monthly cash flow per property, you need 10 properties. 10 properties sounds like a lot until you think about it this way. What if you bought one property per year for 10 years? At the end of 10 years, you have your number, and you have 10 assets appreciating in value simultaneously. Most people never start because they're trying to figure out how to get to 10. You do not need to figure out how to get to 10. You need to figure out how to get to 1. One property changes your financial trajectory. Start with 1. If this was valuable to you today, and I believe it was, hit that subscribe button right now. I put out a new real estate investing education every single week, and I do not want you to miss one lesson. The link to the free 5-day real estate investing challenge is sitting in the description below this video. 5 lessons, written, audio, video, completely free, no catch. Click on it right now while you're still thinking about it, because most people say they'll come back and do it later, and most people never do. And drop a comment below. How many rental properties would you need to replace your current income? Have you ever actually done the math? Drop your number below. I read every single comment, and I respond to every serious question personally. This is Rick Puglisi. My wife Debbie and I have been investing in real estate for 19 years. If we can do it, so can you. I'll see you in the next video.